Hein Schumacher, thank you so much for joining us here at the Bloomberg office.
Great to be here.
You've been in charge for a little over a year.
1.5 years by now.
1.5 years.
Yeah.
I mean, there's been a lot going on. What's the most difficult thing? Is it setting strategy or then making sure that it gets executed on?
Well, you need both. Strategy, structure, and then people, and that's sort of how I think. You want to get the direction right, and when you have it, make sure that the organization is well structured, that we take any blocks out of the way, that we make life a little bit easier for our people, and then of course having great teams to execute on it. So, I've been really working all three of it.
I mean, you've also announced quite a lot in terms of divesting certain assets, combined $1 billion in sales. How do you make sure that the cost is worth it, that you're not paying for it more than you get back?
Right. Yeah, I mean, we have really reviewed our portfolio very thoroughly. So I'll take just a quick step back. In January of this year, with the new leadership team, the new CFO in place, we took a very thorough look at our portfolio. And we decided at that moment in time that it was best for the ice cream business to be demerged, and that our shareholders would have two shares, one in Unilever and one in an ice cream company that we believe on a standalone basis will really fly and is better off on its own. And at the same time, for the remainder of the business, we are really looking to organize ourselves behind scalable brands that can travel, where we can innovate behind with multi-year and scalable programs. So that's what we're really looking for. So when we're transforming Unilever, we want to transform it into a higher growth, a simpler business. And since we have that scale with brands that through which we can actually leverage that scale for the better. So that has been really the background for the change. So
where does the high growth come from? Again, partly I guess it's premiumization, partly is it getting rid of brands that are underperforming in their home countries?
Yeah, I mean, we want to be quite strategic about it on brands, because it's indeed about scaling. And we see that bigger brands, when you have great ideas and big innovations, it just works better with big brands. I mean, to just give you one example, I mean, Dove is our biggest brand in the portfolio, and it's close to 7 billion euro, and it's been growing double-digit this year. So, if you're smart about it, you can do big things with big brands. And I think, the part that you're referring to, and which I've been alluding to recently, which is, can we transform our food business into a more focused food business? Yeah. And that's what we're doing. So we're looking at transforming a fairly eclectic food business to a food business that is higher growth and that has global reach. And that is behind two verticals. One is condiments, and that is led by our Hellmann's power brand. That's about 2/3 of it. And the other one is cooking aids, and that's led by Knorr, which is also about 2/3 of that category. And Knorr, this is a 5 billion euro brand. Hellmann's is a very significant brand, and we believe that by putting your resources behind fewer brands, coming up with better and bigger ideas, that's really where we can make a difference at Unilever.
So what are you selling off? How do you choose what you sell off? And again, is it smaller brands that are less known worldwide that have just not been doing so well?
Yeah, I mean, we've done a couple of divestitures already this year since I've been in the role. So we've divested Dollar Shave Club, we've divested a number of more mainstream brands on personal care, and we are now looking once again to transform part of that foods portfolio. And I like local brands when they're scalable, when they're in big markets such as the US or such as India, for example. That's all good. But I think where we can add real value through our global reach, through our global network, through our significant R&D base, I think we can really add value if we can scale it and make them a lot bigger. So that's just one of the criteria that we're looking at.
Is Marmite safe?
I wouldn't provide running commentary on very particular brands because you obviously will hold me to account on it. I like our UK business a lot. Marmite is an absolute icon, and I completely recognize that. At the same time, we are looking to transform our global foods business into condiments, cooking aids, and making sure that we put most of our resources behind all of that.
So are you telling me that everything's on the chopping block, or that
No.
Do you already have a precise idea of what you would get rid of, but you just don't want to tell us yet?
Well, we're working our way through, but I think for me what's more important, rather than saying, hey, what would we chop off? And hey, all of these brands, we have good brands now. We have drawn a line. I am not in a fire sale process. We are looking to transform our portfolio into a higher growth and attractive category business. And I feel that we're well on the way. And look, a part of that is just by putting more resources behind those things that really work. And sometimes you come to the conclusion that it's better to, that someone else is in a better place to manage a brand than we would be.
So if you're on a fire sale, does that mean you want to get a good price? Like, what are your parameters before you decide what to sell and to whom?
Yeah, I mean, a fire sale would be, look, that it's really performing that bad, or you're like, oh my, we cannot fuel the brand because we don't have the technical expertise anymore, or we can't do anything with it. That's not anymore where we are. We had a few. I really didn't feel that we were the right owner of, for example, of Dollar Shave Club. We were not the right owner of water and air purification that we sold off. And there I really felt, hey, let's move quick, which we did. But I've now come to a point that I say we're going to evolve our portfolio into those higher growth areas with the scalable brands. And we're going to get there, but it's not going to be overnight.
Talk to me about prestige beauty. So that's not going to, as well as expected in the US. What does that mean?
Yeah, I mean, it's prestige beauty has become an important part of what we do, and as you already said, premiumization is a global trend, and I believe that we are a bit under-indexed in our premiumization, in our premium portfolio. So I'm very keen to fuel that, and our prestige beauty portfolio plays a role in that. We have acquired digitally native brands in the US in the last couple of years, whether it's Dermalogica, Living Proof, Hourglass, and so forth. And we're now looking to scale these, and we're bringing them to Europe. So if you're looking for Christmas, some great stuff going on here in the UK for a few of those brands, but we're also bringing them to China as well as to India and a few other places. So scaling them and making them international is an important part of that idea.
We've seen huge inflation, we've seen a pandemic. Is there a concern in the US but also China that customers and consumers are trading down?
The trading down, it's super interesting, and I wouldn't say it's a global phenomenon. And please stop me if I answer, because it is not a one-size-fits-all. So I want to take you through a few big blocks. I mean, first of all, on the the US consumer has shown to be remarkably resilient after COVID. Now, US savings levels are a bit lower, and when inflation comes in and so forth, you see that it's slowing a bit on the upper end. But overall, the US has been growing pretty well. If I look at China, on the other hand, where the luxury market has flourished for a number of years, there I see a significant trading down in China. And I believe that's going to last for at least 2 to 3 years if I look at the fundamentals of the economy. And we are less exposed in that, but we do see headwind also in our categories. For example, we're a market leader in hair care. We do see pressure on the higher end brands and products. If I look on the other hand at Southeast Asia and India, it's a positive story. And I want to conclude on that, if you look at Europe has been the big surprise for many companies this year. The European consumer, contrary to the US consumer, has actually saved quite a bit. And we Europeans, we continue to save. And that means that our ability to buy premium products and something that we really like to have is pretty big. So we've been growing actually very successful in Europe for this year, high single digit in quite a number of categories. And it shows that if you come with the right ideas, bigger innovation and good products that are on the premium side, there is a great market in Europe.
But so why is there a little bit of weakness in beauty premium in the US? Is it the product mix, or is it just that consumers are trying to adjust to the new reality?
Yeah, I think consumers are adjusting a bit to that new reality. As I said, I mean, savings have been depleted a bit after COVID. So you can see that's number one. I think at the same time, the masstige segment in the US has grown quite a bit. So if you think of the tiering in the market, there's that prestige beauty part, then the part that we call masstige, which is that sort of price tier just below, and we're seeing that grow very fast. So the consumer in the US overall is continuing to trade up a bit, but probably not so much more at the very high end at this point.
Talk to me about India. So this is one of your big growth plans for India. You have a delisted company, and then you'll have another part of that, right? That's also delisting. So you'll basically have 2 entities in India.
We have 2 entities, but they're both listed in India, and we have a majority share, and therefore it is a subsidiary of Unilever, and it's a phenomenal asset. If you think about it, we are the number 1 in all our categories in which we play. We're in 85% of Indian households. We've in the last couple of years we've gained quite a bit of market share, and even now, whilst the Indian market in the last couple of quarters was a little sluggish, we've held on market shares and we gained a bit. And we believe that the mid-term opportunity in India and the long-term opportunity in India is arguably, it is the number one opportunity globally. Just because of the size of the market, the number of people participating, but also given the GDP development. We believe that currently GDP is around 2,500 per capita. We believe that's going to grow to approximately 4,000 in the next 8 to 9 years. Only that increase, if you leave everything else constant, it means massive opportunities in our laundry business when people move from hand washing to machine washing. It means big opportunities in hair care. It means big opportunities in shower gels and the way people take care of personal hygiene and so forth. So I'm very excited about that opportunity, and I can talk about it for a long time, but yeah.
But so these are basically two listed entities. Does it mean that you could also buy more? Some of the local competition is actually, quite powerful. They're quite amazing. So could you buy any of them?
Well, look, I mean, we have actually made acquisitions in India in the past, and we will always look in India because it's such an important market for us. But at the same time, we have a phenomenal portfolio of brands. And I want to be careful that we're not fragmenting stuff further, but that we actually grow what we own. And I think we are playing now in India essentially in all price tiers. If you look at hair care, for example, we're 4 or 5 times the next competitor. And we play the whole price piano with Tresemme, with Dove at the higher end, with Tresemme being there, with Clinic being there more on the value side. So we believe we can serve the Indian consumer with our current portfolio extraordinarily well, and that's what we want to do.
What about Indonesia?
Indonesia has been a long-standing issue for the company. It's very different than India. We're also listed in Indonesia, but it has been a long-standing issue. And I believe if you really take a bit of distance, the company was surprised by a local competitor coming in at cheaper prices, and we did not innovate fast enough, and we did not market our products and our brands sharp enough to justify that price difference with cheaper priced products and brands. And that's something that's been going on for quite a while. We are resetting that company. And because I'm a big believer in the long term and in the midterm and the long term future of Indonesia, for us, we're definitely not giving up, but we need to take a significant step back, make a significant reset to make Indonesia work for us going forward. And that's what we will do.
Do you worry about tariffs around the world under President Trump come January 21st? And what does that mean for your pricing and actually also where you make some of your goods?
Yeah, I mean, tariffs and protection is always disruptive for businesses that operate globally, and I recognize that. But hey, if it's a reality, then it's a reality. I think what we have been doing over the last few years is, in general, after COVID, we have made our markets in general more self-sufficient. Right. So if you look at, for example, our China market, it's essentially self-sufficient. India, for sure, is. The US is mostly self-sufficient, with some imports though from Mexico, but that is not material to the group. It's not significant, and we have a fairly agile supply chain that, if the situation, if it comes to that point, that we could reallocate our production from those factories to other parts in our network and make the US probably even more self-sufficient. So, hey, we are adapting fast. We're agile. It's not of material impact to the group, but we're obviously watching it very, very closely. I
mean, does it influence your decision on where to cut jobs?
No, at this point it doesn't. No, we have made an announcement on a restructuring program that you're probably referring to in March. 7,500 people. Because we felt that was for 2 reasons. One, we are making the organization ready for a Unilever without ice cream, and that needs to be a lighter organization. And we wanted to be ahead of that demerger and take measures now. So that was reason 1. And reason number 2, we have changed the structure. I talked to you about strategy and structure. We've changed the structure to be faster, to be able to scale these brands faster across the globe. And when you do that, you need to take the consequences that, hey, it can be a bit, we can be more efficient. And that's what that's what we're doing. But
you worry about unfair advantage for some of your competitors that are based in the US?
Yeah, our competitor. We are based in the US. You know, the US is our biggest market.
But you're not headquartered there. So someone like Pepsi, do they have an advantage under Trump if he puts America first?
No, I don't think so. I think we have been in the US for decades. We can, you know, it's our largest market. We have phenomenal US-centric brands. I talked about prestige beauty, but also brands in well-being such as Liquid IV, such as Olly on the VMS side and on the well-being side. So, you know, we are in many ways, you know, in that market, we are an American company, and I believe that the US government has every interest to work with companies from overseas who are active in America to promote investment in North America, to care for jobs, to do the right thing for that market, and that's what we're doing.
So you also divested, of course, what you had in Russia. Maybe some of your US competitors won't have to going forward. Was it a mistake to get rid of it?
You know, Russia was something that was a very difficult decision to make. I found that in my last 1.5 years, it was arguably the most difficult decision to make. But I did make it quite soon, in the sense that I wanted to create optionality for us to exit that market, and that was a tedious process. So it took us more than 12 to 14 months to come to that point that we were able to exit. And you know, at some point in September, I felt I had the optionality on the table, and again, it was difficult, but I made the decision to go, not because of the war that's going on right now, but because I felt that the control on our business was coming down. I feel that ultimately, if you're a global company, you need to have control of your operations. We need to be able to review results. We need to be able to get the cash out of the country ultimately. We need to be able to make sure that we live up to potentially international sanctions. We need to be able to control our brands and where our brands travel. And that was something that I felt wasn't enough anymore. And I didn't see a window into the near future where we would regain that control. And that drove the decision to exit.
And talk to me about Ben & Jerry's. So the way that Ben & Jerry's was set up was also having an independent board. Will that still be the case going forward, given actually, you know, a lot of the questions that you've just been telling me about?
Yeah. No, Ben & Jerry's has an independent board, and that independent board that looks after the social mission of Ben & Jerry's only. So it's not a board that looks at the business side of Ben & Jerry's, because that's what we do, but it looks after the social mission that's there. That was agreed at the time that Unilever acquired Ben & Jerry's. It's in the merger agreement, and we absolutely respect that merger agreement. And therefore, the new ice cream company that will be demerged will respect that merger agreement.
Is it tough when, you know, the politics gets into selling products?
You know, I mean, in the case of Ben & Jerry's, look, that brand, we acquired it, I think, at a sales level of 120 million or something like that, and we've grown it to a more than $1 billion brand. It's been growing very successfully, and part of the success of Ben & Jerry's is a social mission, and the way they speak out and the way they speak up, and as long as that fits, you know, the brand, peace, love, and ice cream, I'm all for that. It's a wonderful thing to do. You need to be careful that as a company that you don't take political sides when that's not necessary. So, you know, sometimes that brings a certain tension, but I believe it's a healthy tension. They keep us on our toes, and it's a great brand. I love it, and I'm sure it will be successful going forward.
Hein, over the last 18 months, what have you learned about yourself, and what have you learned about Unilever?
Wow, that's a very good question. You know, I think I learned myself that, you know, that if you want to, as I said, if you really want to move a ship like this, you need some time to think it through. And that was the reason that last year in October we came with a tactical intervention plan, but only last Friday we talked to our investors and our shareholders in a capital markets day in which we revealed a longer term strategy. Also a new purpose of the company, and the purpose of the company goes to the heart of what kind of company you actually want to be. And I learned that sometimes it's good to take a little bit of time whilst keeping the foot on the pedal on performance. But don't rush. You know, make sure it works. Because of course I'm impatient. You know, you want to move forward. You want to keep people moving. You want to have that success that this company was looking for. But at the same time, before you come to those bigger decisions, take time. Talk to many people, talk to many stakeholders, sometimes more than I wanted, but I'm glad I did it.
And this is the right strategy?
I'm a big believer. You know, we talked to 120,000 of our employees in the last couple of weeks through different fora, town halls, and not only me, but my whole team, of course, did. And you know, and I need that team. You know, that's why it's going to work or not. I feel that it unlocks and unleashes a lot of energy, and I get a lot of in-mail and what we can now do with our new purpose to brighten everyday life for all, to make your lives a little bit better, a bit more convenient, a bit more sustainable. A day like this, you know, and that's what excites me.
I mean, last question. Some people say that, you know, this comes at the expense of longer-term sustainability. Is that fair criticism?
No, I'm going to be very passionate about that. Absolutely not. I heard it before, but we have refocused our sustainability strategy from a fairly wide-ranging set of objectives and somewhat higher level goals into, you know, focus on those areas where A, we can make the biggest impact, but also what the world is waiting for. We are focusing on climate, we're focusing on plastics, on nature and on livelihoods. And I feel we can make a real impact there. Our spend and investment in sustainability to make these goals come true has not come down, but it's, you know, against targeted roadmaps, it's costed, it's time bound, and it comes with urgency to do what I think that we need. So no, I don't agree with that. I'm very adamant about it. And probably I don't talk about it as much, but it is probably even more so in our operations than it was. So I feel good about that.